Hi friends, today we are going to discuss about a chemical company called Alkyl Amine, which is listed on our NSE and BSE platform. So this company belongs to sector of process industry, and it's basically dealing in the chemicals part, specialty chemicals. And let's try to understand what the company does. So it is the leading manufacturer of aliphatic amine in India. Aliphatic amine are basically kind of ammonia, where we replace ammonia with some radicals such as methyl ethyl, and it has 100 plus products developed in-house, and it serves a large number of industries such as pharma, agrochemical, paint, textile. So now we understand that what this company is basically into specialty chemicals, and it's a large cap company. Its market cap is around 10,440 crores, and its revenue for the last trailing 12 months is around 1,440 crores. So it's trading at a valuation of around 7x price to sale and 70x price to earning. So just going by the valuation perspective, the company does not seem to be cheap. Seems to be on the expensive side. Coming to dividends, its dividend yield is around 0.4%. Now we'll try to do a complete analysis of this company. First, we'll try to look at the fundamentals, and then we'll move on to the technicals. So we have an overall understanding of the company's current position. So coming to debt, there's no concern. We've run a checklist, and it scores 5 out of 5. There's no debt. Its ability to serve debt is not in question. Next, we come to earnings. See, earnings, when we take the last 5 years CAGR, so sales growth is around 11%, EBITDA is 9%, and EPS around 11%. This seems to be quite stable and good numbers, a kind of 11 to 12% growth. And coming to last 3 years, sales is again 5%, but EBITDA here is minus 16%, and EPS is minus 20%. So it clearly seems that though company has increased its sales by 5%, it's both the earnings have dropped by 20%. So there's a clear loss of margins here in the last 3 years. And coming to the last 1 year, so company has lost on both revenue as well as earnings. So it has lost its revenue by around 14% and earnings by around 35%. So clearly, the company, from long-term perspective, say 5 year perspective, the growth numbers are good. But from the short-term perspective, say 3 year or 1 year, the growth has really come off the wheels. And coming to are these numbers consistent? So when we run the check, it is scoring 3 out of 5. It is 60% consistent. So let's just try to see the year-on-year chart for this company, starting from 2019 to 2024. It was earning net income of 86 CR, then 215 CR. So there's a good growth of it is more than doubling its earning. Then again there's a good growth of 37%. But 2021 to 22 there's a drop of 24%. So here we see that margins have dropped from say 24% to 15%, a net margin. So clearly, the margins are something which is clearly defining the earnings path for this company. And from the way highs in 35% operating margin in 21, it has dropped to around 17% recently. And that is why the company's earnings have also dropped very significantly. Now coming to the quarters, so last 4 quarters, it is again kind of posting disappointing numbers. So fundamentally, I can say that this company, it has a good return on invested capital, good dividend payout ratio, good operating cash flows. So overall, see, this company is quite good if we consider from long-term perspective. But for the short term, it's kind of earnings are really going down. So this basically issue is basically an opportunity. If you're a long-term investor, one can look at investing in this company so that as maybe 2 quarters to 3 quarters down the line, once the earnings start to recover, one can earn handsome returns. So now let's move to the charts. Let's see how the price movement is for this company. So I'm using the TradingView platform, so I'll be keep using the same. Okay, so this is the long-term monthly chart of the company. In the monthly chart, one can see like in 21 when the earnings had peaked. At the top we have the earnings per share. So in September of 21, our earnings per share was around 60, and now it has dropped to around 29. So clearly there's a 50% drop in earnings. And similarly we can see in the price chart as well, from the top of 4800 the stock price has in fact moved to around 1800 levels. So and coming to the P by E chart, so this P by E chart, again we can see that company is trading at around 70 P by E, and in last 5 year highest P by E it's 81. So it is not cheap from any perspective. But the thing with this chemical sector is their earnings are very kind of cyclical in nature. So once earnings start to go up, then it is very difficult to catch this stock when it is really starting to move up. Like we see from here, it was August of 20, it was at level of around 1200, and it grew 4 times in a matter of 1 year. It grew 4 times, so it will be very difficult to catch such a high speed buzz. So one has to say bet on recovery. One has to bet, and if one is a key patient investor, then one can wait for around 2 to 3 quarters, maybe by 2025 and all. Once the earnings start to improve, the price will also improve. Okay, and coming to so here on the left side we have a monthly chart whereby we see the price drop, and yeah, on the right side we have a daily chart. This kind of, if you want to some take some trading position, so again it is not suggested to take a trading position in this company. If we see the last 1 year returns, it is minus 19%, and as compared to Nifty it has underperformed by at least minus 35%. So as of now, it is not suggested to invest in this company for technical reasons, but going for the fundamental reasons, one can invest this company with a long-term horizon. Don't expect big returns in the say 1 or 2 months. It might take a couple of quarters, but yeah, in the long term, it can give you some handsome returns. So okay, so I think we'll complete our analysis now. Thank you for listening.